582%, 105%, 98%, 82%. I've had these 4 stocks anywhere between 1 and 3 years, and I've produced those astronomical returns. Now, I'm no genius, but I'm going to show you the 7 things that I look at the most when I'm going to pick a new stock. Right now, it is 2020 and a lot is going on in the world. People are selling a lot of stocks and then looking for a lot of new stocks to repurchase. Now is more important than ever to reposition your portfolio for long-term growth. And I'm going to try to make it where this video will be valuable for years to come. This isn't going to be some kind of short-term buy this month, sell next month and forget about it. I'm talking about decades. Stocks that I believe will make it in the long run, will have these great returns for 20, 30 years out. So what are these 7 criteria that I look at? Let's jump right into it. The very first thing we're going to be looking at is the income statement. There are 4 things that I like to look at that you can find on the income statement, and what we're going to use is Seeking Alpha. We're going to be looking at both Visa and GE. Now just be aware, I'm not looking to get a crazy return like 500% in a couple of years. I'm looking more along the lines of maybe 12% a year. But this is what I've been doing since day one. These are the things that I like to look at. And my goal is just for you to also be able to pick winners like I have. So on Seeking Alpha, we'll start with GE. I'm pretty sure everyone knows what GE is. General Electric. Maybe you have one of their washers in your basement or whatever other type of appliance. The very first thing that I like to look at is revenue. What is their revenue? Go into their financials. Seeking Alpha is a great tool to use because not only will it show you the numbers off to the right, the past 5 years, and what they're looking to do this year, but it'll also show you a nice little chart so you can see the trend, if it's going up, if it's going down. And as you can see here, it's not looking too hot for GE. 2016, they did 110 billion, and it's been slowly declining for the past 4 years. The next thing that I like to look at is gross profit. If we look at GE's gross profit, again, not a pretty sight. 2015 was its highest. That doesn't look good for 2017, and it kind of picked back up in these 2 years. It's not looking good. It's not looking like how it was back in 2015. And if we take a look at this year, it's not looking good either. It's a little bit lower than last year. Now, we're going to scroll down, and the next thing we're going to look at is earnings before interest, tax, and depreciation. A lot of people love to look at this. A lot of investors think that this is a great metric to look at, and I'd have to agree with them. I think it's a very important thing to look at. So if we scroll down, look at earnings before interest, tax, depreciation, and amortization. What we can see here is, again, not a pretty sight. If you could draw a line, it is going down again. The next thing that we're going to look at is earnings per share. So earnings per share is right here. This is disgusting. Look at this. You are in the negative most years. 2018 was an awful hit. If we look at how this year is lining up, it's not looking much better for this year. They're still in the negative. All right, so far things aren't looking too good for GE. The 4 things that I look at on an income statement aren't looking very good. A lot of declining. So this is probably a stock I'm not going to touch. Now let's look at what a company that I will be buying, like Visa. What does Visa look like? So if we go to Visa, we're at their income statement right away. We already know we're going to look at revenue. Positive growth. This is great momentum for the past 5 years, and you could see this upcoming year, 2020, is also lining up to be really nice. Next is gross profit. Again, great growth, this year is also looking good. We scroll down to the earnings before interest, tax, depreciation, and amortization. Steady growth. And this year, it looks like it's going to be even more. What about your basic earnings per share? Again, growth. There's a common theme here. Growth. You want to see growth with these four things. And if we go all the way over to 2020, that is even more than 2019. So Visa has the four things I look at on an income statement, Visa has. I want to see growth with revenue, gross profit, earnings before tax, interest, depreciation, amortization, and basic earnings per share. If I don't see that growth in all four of those, chances are I'm not going to be investing in this stock. Now, there are some more important things, in my opinion, to look at, and that's when we jump over to cash flow. We're going to look at cash flow statements, and we're going to look at what I believe to be the most important fundamental metric when I am picking a stock. This is all going to be in my second video, which there will be a link somewhere for you to click on to look at, to watch that video and see the last 3 criteria that I look at, and then I will show you the 9 stocks that I'm going to purchase this year in 2020, and the 9 stocks I will probably hold on to for the next couple of decades so I can continue this insane growth like I have had. If you like this video, if you believe it brought value to you and your investing strategy, make sure to give that thumbs up and hit subscribe. It's the only thing I'll ever ask of you. See you in the next one.